Joining us right now on the phone to give us his take on oil's move over that $80 mark, Boone Pickens, the CEO of BP Capital. And Boone, thank you for being with us today.
Sure, Becky.
You know, Boone, we wanted to have you on today because back in July, about the middle of July, just about 2 months ago, you came on our program and you said $80 before your 80th birthday. Now, by my calculation, that means you still had about 8 months of pad time left on this. There have been a lot of people surprised by this move. You saw it going here, but this recent run-up, did that catch even you by surprise?
Not really, because you're still, go back to supply, 85 million barrels a day globally, and you've got projections for 88 million in the fourth quarter. We're almost to the fourth quarter, and 85 won't service 88, so the front end of the market is very tight, obviously, and you're up to 80. The back end of the market, you know, you go out 2 or 3 years and you're $70, so it's the front end's tight.
You know, Boone, there are a lot of people who are talking not only about these tight supplies, supply and demand issues, but also the New York Post today points out that hedge funds have been doing a lot of activity in the futures and the oil's pits. They say that they've been using a lot of fresh cash that they got from institution and the Federal Reserve's rescue moves 2 weeks ago to try and drive oil prices higher. How much of this do you think may be speculation?
I don't know. I just stick with the fundamentals, and I don't complicate it with some of these other things. Those are small volumes overall, but you know, look at the economy for just a second. You know, I'm not an economist,
right?
But I'm a pretty good parrot, and I get briefed up, you know, frequently on these things. But if we have I think you got to be very close to recession. If we go into recession, then that demand for 88 million is going to fall off.
Right.
But if we don't go into recession and 88 million barrel demand hangs in there, you've got to then I think you've got to look at the geopolitical side of the issue, because that's starting to heat up too. But the one that's a real surprise for us is Mexico, and we have that's 1.4 million a day to the United States, and now they've got serious problems, and that could be a real problem for our supply. So I don't know. I think it's and if you remember when we talked about this subject, I said the fourth quarter of this year we're gonna see some very unusual things happen.
Yeah, and you bring up a good point. There are a lot of people who have been on our show this morning also talking about the odds of a recession. Some people are saying they expect it, higher odds coming from economists than we've seen in some time. If we head into a recession, though, you do think oil prices will drop back off?
Well, if demand falls off, it sure will. But, you know, there's a lot of room between 85 and 88. So if they fell off to 87, I don't think it's going to be the same drill, but I don't know. It's just I find it. I've aimed for the fourth quarter now for a year of this year, and so the fourth quarter is I think it's going to be very, very exciting.
Hey, Boone, is the oil market smart enough to, if it doesn't come down, that it's forecasting there will be no recession?
Well, give it to me again.
Is the oil market smart enough to know, like, if we see that it doesn't drop, if it keeps rising, is that saying there won't be a recession? Can we actually use that as a bullish sign for the global economy, or does the oil market actually wait till we all know we're in recession to sell off?
Joe, I think I think by the time that happens, you're going to know you're in a recession. I don't think the oil market is going to be the indicator for it, but I do think that $80 oil could, if you're on the brink of recession, could push you over into it.
You know, Boone, if you look at the stock market, it's kind of surprised us that $80 oil hasn't seemed to bother stocks at all yet. Is there a level where you start to see oil prices affect stock prices again?
Becky, you're giving me a lot more credit than I deserve. I can't. But, you know, I don't know when it affects the stock market.
You know, also, I wanted to ask you about natural gas. We had a guy who came on earlier and said the real play here is to be buying natural gas and selling oil. I know you made a lot of money a couple of years ago betting on natural gas. What do you think about nat gas right now?
Oh, I think it's too early, probably. I still think there's an oversupply of natural gas. We've got a lot of gas in storage, is not as much as we thought. Now, making comparisons to past years, but it's still there's still a lot of natural gas around.
And finally, Boone, we know you called it right last time around, $80 before your 80th birthday. Do you have a new target price you're looking for oil?
No, I just let's just look at the fourth quarter here, and if we stick with 85 and 88, we're going to have it over $80 a barrel. I can tell you that.
Will you call us before you liquidate some of your longs, Boone? Could you at least do that?
How long before you want that call?
Well, you can actually place the trade and then call us, so you'll be getting executed as you're at least telling us. I mean, is that okay?
That's no.
Hey, Boone, thank you very much for calling in today. We appreciate your time.
Okay, thank you.
Boone Pickens.
Bye.
I just wonder if he's calling anyone right. I don't think he's calling anyone right now, but he sounded, if he says a recession would hurt oil prices, and we're pretty close to a point where the oil price is high enough to cause a recession, if we connect all the dots, doesn't it sound like he might be thinking it might be time to lighten up a little?
Yeah, but his point was, if you take a look at how much demand actually weakens, if you go from 88 million barrels a day to 87, not a big deal.
Right, but if it goes below
85.
But he said a recession would hurt the price of oil, and we're at a point where the oil prices could cause a recession.
This is the first time we've had him on in a long time that he won't actually stake a claim on a price.
He didn't sound as rip-roaring bullish as he's been.
Of course, we're going to parse every word.
Instead of asking would you call us before you liquidate some longs, I wish I had asked him, have you liquidated any longs yet? Is he gone?
Uh-oh, should I call him back?
He won't add. He may plead the fifth. All right, let's get to our task force. Steve Roukis is a senior portfolio manager at Matrix Asset Advisors. Ben Lichtenstein, president of TradersAudio.com. And that smiling Cheshire cat down there in the lower right is Phil Flynn, senior market analyst at Alaron Trading. He was leading He was leading some of the cheers yesterday. You don't care about anyone else, you oil traders, Phil. You don't care that you could push the economy into a recession.
Joe, you're still looking at the barrel half empty. The barrel's half full, my man. Come on. I actually think that $80 a barrel oil is showing us that we're not going into a recession. That's what it's telling me. I mean, come on, let's face it. The market is reacting to the fact that it thinks that we're going to get an interest rate cut. It's pushing down the price of the dollar, and that we're not going into a recession. So I would say yes, that this market, this $80 a barrel, forgetting the storm part of the equation, is saying that the economy is coming in for a soft landing.
Well, I just asked, did you hear me ask that? Were you listening?
Yes, I did.
So that wasn't a stupid question, whether the oil market's telling us we're going to avoid a recession.
No, and I think Mr. Pickens, he didn't say that, he thought that $80 was going to push us into a recession. What he did say is that if the economy starts to slow, it could exacerbate a recession. But I don't think the reason why we're at $80 is because we're getting, into a recession. I think we're at $80 a barrel because the talk of the depth of demand has been greatly exaggerated.
All right, Steve Roukis, you're a portfolio manager.
Sure.
Have you liquidated everything and gone into Exxon, or what are you doing?
No, I mean, we're sticking here with our discipline. I think it's a great time to buy stocks. This credit crunch that hit related to the housing, caused a good sell-off this summer. And this has been a good buying opportunity, one of the best buying opportunities since 2002. And I think there's a lot of stocks that have been knocked down, and the economy's still pretty good. There's some soft parts, and I think you'll get some help from Bernanke. You have to remember, as once people see, Bernanke gives some help and the economy get a little stronger, stocks will rebound. So you have to buy on the uncertainty, and there's good opportunities today.
What about today, Ben? We look like we're going to have a little bit. That weakness late yesterday is reflected in the fair value of the futures. Look like we're going to be higher today, right?
Yeah. Well, it looked to me like we were a little bit lower here, but we're going through the rollover right now. So I don't know. I think that we're going to have probably a little bit of a lackluster session again today. I think that oil's definitely a factor right now, as everybody knows. $80 a barrel is a major concern. I'm going to go on record saying that I think we're going to try test $85 a barrel. I think that's keeping a major damper on the market right now. I mean, I think the market really wants to get above 13,500 in the Dow. It just really can't with oil at these levels, and jobs concern right now for jobs. But for the most part, everybody's looking for a rate cut next week. The market wants to rally, just needs to really kind of get that boost and can't get it yet with oil at these levels.
Yeah. All right. Thanks, gentlemen. Steve, Ben, and Phil.